Hey guys, how's it going? For this video, we're gonna discuss a bit about how tax in UK works as a landlord. So, just a quick story before we start. This is the first year I started renting out my property as a landlord. So, I started my year pretty much thinking this, and then I ended up being a bit like this, which is to say quite disappointing. But again, I learned a lot of lessons along the way, so I really hope this video helps current landlords or people thinking to pursue this route of trying to get their financial stability through owning multiple properties, because there are quite a few taxes along the way, and we are going to discuss them in this clip. So thank you for joining me, and thank you for your time, and we could start right now. So I put on the screen the 5 taxes that as landlords we need to discuss, figure out, or also take into account. So we have the stamp duty tax, we have the VAT, which is value added tax, we have the income tax, which is I think the most important one we'll spend the most time on. We have capital gains tax, and we have inheritance tax. So we'll go for each and every one really fast, except the income tax, which we need to discuss because that's the biggest and most important tax when it comes to. Okay guys, so the first tax that we are going to discuss is the stamp duty tax. And this one is by far the easiest one to comprehend and understand. So when planning on buying a property, other than thinking about how much deposit you need to put with the banks, how much your agency fees are going to cost you, you actually think you need to pay also a tax on the property when it comes to buying it to the government. So I'm gonna put on the screen the numbers so you guys will understand it better. So the buy-to-let stamp duty is higher than the classical residential stamp duty. It's between 0 and 500k 3%, between 500k and 925,000 pounds 8%, and between 925k and a million and a half 13%, and everything over a million and a half is taxed at 50%. These are just similar to the tax brackets, so the value between the brackets, that's how much you get taxed. And I'll put on a screen also 2 examples for you guys to understand how much stamp duty you will be paying on buy-to-let. And just one more thing on this subject I need to tell you guys is that it might change on the 31st of March 2021. So if you're looking at this clip after that date, please go online and double check if these numbers are still correct, or they might have changed, or the brackets might have changed. Okay guys, so the next tax is going to be a really short discussion. So in terms of the VAT, I only put this one out so I'll make everybody understand. So in terms of VAT, as a residential landlord or even a landlord of a commercial property, you are exempted from any VAT tax. You only need to pay tax if you're offering any services or you have a furnished holiday letting, which most landlords do not fall under this. If you think you have a holiday letting, then I think you need to also pay into account the VAT tax. So not too much about, no information is needed on this one. Again, I need to reiterate, any residential property or commercial property is exempted from VAT. Okay guys, so now we're going to discuss about the most important one, is the income tax. So I really want to spend a bit more time on this area, and what I want to do is to split this area into 3 areas. Let's discuss first of all what are the basic rates for the income tax. Then we'll discuss about deductions, and then we'll discuss about also tax relief and allowances. So if you take the income tax as a concept, it's quite easy to understand because we've spoken about this in previous videos. And if you're new to this, I'm just going to put on the screen the income tax rates in the UK. It's pretty easy to understand. So if you think about this logically, the profit that you make from your property or properties is subjective to this tax. To figure out the actual profits from your property, we need to understand how much you guys are renting it for, which is good. That gives you the initial capital to calculate your income tax. But then we have to understand the second and third step that we are going to discuss: deductions, and then tax reliefs and allowances. Now, deductions is one of the tricky areas that I found myself in this year. So I need to make you guys understand that these deductions, I'll put the full list after explaining you guys this, but need to understand that there are deductions that are allowed because you are maintaining the property, and deductions are not allowed because you are increasing the property's value, if that makes sense. So one goes into income tax and one goes into capital expenses then. So a really easy and clear example is let's say you have a house that you're renting, the TV breaks, right? And you say, okay, I'm gonna change it for a new one. That makes total sense. But if the TV that you originally had was, let's say, £400 TV, and now you're buying a £2,000 TV, you could only deduct what it was originally when the rent agreement was signed. So for example, if you want to expand the house, that's going to be a capital expense because it's going to increase the value of the property. That's not normal wear and tear. So be really careful when you make these assumptions, because you don't want at the end of the year thinking you're gonna claim back for a specific type of work or a specific type of equipment you invested in the rental property, and then you figure out it's under capital expense and you're not going to get your money back. So be really careful. So again, I'm just gonna tell you guys the full list. So general maintenance and repairs of the property, and you really have to understand repairs and general maintenance, not improvements. So everything that's an improvement is a capital expense and it won't be covered here, so it's not going to be a deduction. Then all the rates, water rates, electricity, gas, council tax, that's an easy, clear deductible. Landlord insurance, that's an easy one. Cost of services, so it's either gardeners, cleaners, that could be deducted. Any fees from letting agents, or if you have a management company that kind of supersedes all your renting properties, that could be deducted easily. Then any legal fees when it comes to the property. Accountant fees, again, if you're hiring at the end of the year somebody to work on your tax assessment, then that's definitely a direct deduction. Any direct costs, so I think any phone calls, stationery, any advertising, also that could be deducted. And this is another gray area, vehicle cost, but you have to prove that first of all, it's not the full vehicle cost, it's just the partial vehicle cost that you could explain that it was used for the sole purpose of renting out the property. So If you go and fix something in the property that the tenant has highlighted, then you could put that one as a clear deductible. So again, this is where most people make big mistakes. They think that if they change something with a more expensive one, they could deduct it at the end of the year. So really be careful. If you want it's a repair, or if you're changing something, it has to be like for like. So if it's a 400-pound table, change it with a 400-pound table. If it's $100 bed, change it with a $100 bed. If you had no bed if you had it unfurnished when you rented it out, and now you want to furnish it, that's a capital expense. So be really careful on this one, guys, because you could get in a position where you're kind of losing money at the end of the year. Okay, guys, so the last part on the income tax is understanding the tax relief and allowances. So allowances is quite easy to understand. So for every single property, you could get £1,000 tax-free allowance from the government. So if you have multiple properties, then you could get £1,000 per every single property as tax-free allowance. So that's pretty straightforward. But when it comes to the tax relief, things get to be a lot more confusing, because there's so many, I guess, people that wrote blogs or wrote explanations on this, but it's different for every year. So I think around 2016 or 2017 it was a stagger law on the tax relief. But what you guys need to know now, from April 2020, when it comes to claiming for a tax relief, the mortgage interest payments, it's not going to be 100% like it was before. So starting from April 2020, you will be getting 20% tax relief or a tax reduction on the lowest value of the mortgage interest payment, or the rental income profit, or the total annual income. So I'm just gonna create I'm gonna put an example on the screen for you guys to better understand. But you have to take into account the rental income profit, and if you have a job, an additional job. So what most people have, they have an income from a job and an income from a rental property, and that gives you your total annual income. And then taking this into account, then you have to calculate which one is the lowest. So you calculate the interest you make on your mortgage. So that's the part that the bank charges you for giving you the sum of money to pay the house, or you choose it's not like you choose. You have to select the lowest value between, again, the mortgage interest payment, the rental from the property, and the total annual income. And it's, to be fair, 99% of the people are going to only get 20% off their mortgage interest payment, because that's, if you think about this, I think per year for a property that's 300k, the mortgage interest payment is going to be around £3,000. So I'll put also the correct numbers on the screen, because I'm doing them on top of my head. But it's 99.9%. You have to calculate your mortgage interest payment per year and do 20%, calculate 20% of that, and that's the tax relief that you're gonna get. It's fairly uncommon to have your rental income profit or your total annual income after deduction and losses to be kind of lower than that. But it's possible, and you need to take that in mind. And if you're not sure, maybe you need to find an accountant to properly calculate everything. This, again, it's only from a starting point, and if you're not sure, again, you need to maybe talk to an accountant. Okay, on this topic now, on the capital gains tax. As a landlord, you don't really need to worry about this, only in the situation when you're actually selling a house. So if you are selling your buy-to-let property, then you have to pay capital gains tax on this. So depending where you are in the income tax bracket, so you're going to pay 20% if you are under the basic rate, or you're going to pay 28% if you are in the higher rate. But what I would suggest, you don't pay capital gain tax on your main home. So to be fair, I would suggest you guys to make that, if you know in the future you really want to sell that property, I would suggest making that property your main home, converted into a buy-to-let, and after a year or 2 years in that property, you can sell it as a main home and you won't pay capital gains on it. So you really need to think about that one. If you have a buy-to-let property, don't jump the gun and just sell it really fast, because there are legal ways that you could not pay capital gains tax on it. Okay guys, so the last topic of today is inheritance tax. Again, as a landlord, you only need to think about this one at the end of your life, or if somebody dies and you inherit it from them, then you need to really kind of understand it. It's quite complicated, and I'm just gonna give you guys the high level details. I don't really know that well the loopholes when it comes to this, but when it comes to inheritance tax, between I think 0 and £325,000, you don't pay any tax on it, and that's your allowance. Then you could get an additional allowance on this. So if it's a main residence and it's given to the children or grandchildren of the person that's deceased, then you could get an additional £175,000 on top of this, tax-free. And then everything over this, it's going to be taxed 40%. So I'm just going to put some numbers on the screen so it makes sense to you guys, but it's a pretty straightforward tax. And I think if you're in this position, for example, and if you're seeing yourself paying quite a lot of tax on this, maybe you need to talk to somebody to better understand this topic, because I think there are accountant agencies that actually specialize in this type of tax. But this is the basic knowledge that you guys need to have. If your property that you're inheriting is under £325,000, then you're safe. If you're the grandchild or the child of the person deceased and it was their main home, I think that bumps it up to £500,000. And you don't need to worry. I mean, if the property is higher than £500,000 in this scenario, then I think you better speak to an accountant and see if there are ways you could reduce this tax. Again, guys, that will be it for this subject. Thank you so much for your time. Thank you also for your patience. And definitely, if you're not sure about anything I say here or you think differently, leave a comment first and with the source, and I'll definitely check it out. And always take everything that I say as a guidance, because for example, the stamp duty on the 31st of March 2021, it might change. So always make sure after watching my videos, if you're not sure or if it's way in the future, double check on the government on the official government site. And again, if that doesn't answer, maybe it's worth investing some money or maybe in a free consultation with an accountant, and you go from there, because you don't want to be in a situation where you owe money to the government, because it's never a good position and you end up incurring penalty fees. Again, apologies on this long ending. Thank you again, and take care, guys. Stay safe.